Problem 8-31. We're going to do a bank reconciliation, and then we're going to journalize any transactions that appeared on the bank statement that the company was not aware of. So what we have here, the May cash records of Durkin Insurance. So notice they're showing the cash data with a column for cash receipts and a column for cash payments. As you can see, all the payments are made by checks. And then we've got the bank statement for the month of May. So let's scroll down. Looks like the ending balance is $17,860. But over here it shows the cash balance is $16,340. So why is there a difference? Because there are transactions that the bank knows about that we do not know about. And there's transactions that we know about and have put in our checking account, in other words, our cash account, that the bank does not know about. So just a quick review here. The reason we're doing a bank reconciliation, we're going to compare the monthly bank statement to our company's cash account to see if there's any missing transactions. And we're also going to look for errors in our accounting records and errors on the bank statement. And then finally, if we are missing any transactions, such as interest revenue and bank check charges and bank fees, we're going to enter them into our journal. And if we made any errors, we will also correct them in our journal. Also, we need to know some definitions. Again, this is a review. So if you forgot what an outstanding check is, you need to pause the video and review this section. And if you forgot what a deposit in transit is, you need to pause the video and review this. Things we've gone over twice before now. And then notice I've scrolled down here so that we can see what some of these acronyms stand for. BC, which is right here, stands for bank collection. EFT stands for electronic funds transfer. That means someone went online and transferred funds without using a check. NSF is a non-sufficient funds checks. That means someone has written a check and there was not sufficient funds, in other words, not enough funds in their checking account. So the bank is going to take that money out of the account that deposited it. And then SC stands for service charge. Now what I recommend you do is you print out both of these tables and then write notes on them like I'm going to do. Now I can't write on my computer screen on these, so I've done screenshots using this software called Jing, and then I will be able to take notes on it. So if I put an arrow, if you see me put an arrow next to something like this, that means, as you can see down here with my explanation, an arrow means the data appears on both a bank statement and in the cash account. So I would not check that one off because it does not appear on both, but I would check off this 4190 because it does appear in both. And then if something has a rectangle on it, like this when we're done, that means the rectangle means the other side. So I've put a rectangle around this EFT $200 deposit. So the reason I would put a rectangle around this is because at the other side does not have a cash receipt of $200. Okay, so that's what these symbols mean that I'm going to be using. So let's start over. Get rid of those, so we'll start from scratch. And then notice in the homework, if I scroll down, they make us do the bank side first. So remember, on the bank side, we're going to be entering information that the bank did not know about. We'll do any additions that the bank did not know about and any subtractions that the bank did not know about. Additions would be deposits in transit, and subtractions would probably be outstanding checks. But first, before we do that, the best way to do this problem is you get both of your tables side by side, and we're going to start on the book side. Remember, this side I got by clicking here. So this is the book side. So I might as well put a little reminder on here. So this is the book side, meaning it's the cash account of the company. So what I'm going to do is I'm going to go through here one by one, and I'm going to check things off. So first thing I'm going to look for is, now notice these are cash receipts. So these are deposits. So I'll be looking for these deposits over here in this deposit section. So the first thing we're looking for is a 4190. Is there a 4190 deposit over here? Yes. If so, check it off so we know that we're done with that. Next, going back here, we've got a $560 deposit, and I'm going to check off this $560 deposit. Don't worry about the dates being different. Notice that date is on the 9th. This date, it's on the 10th. That's because we recorded it in our checking account on the 9th, and the bank didn't get around to recording it until the 10th. And then we've got a $510 deposit, which matches here, so we check that off. We've got a 2130 deposit, check that off, so we know we're done with it. Check that off. Then we got a, I don't see this 1880 deposit over here. So this is called a deposit in transit. Remember, a deposit in transit, if you forgot, it's right here. That's a deposit that we have made late in the month. We entered it in our checking account, in other words, our cash account, but it did not get done in time to appear on the bank statement. So that's called a deposit in transit. So the reason I put a rectangle around it, because remember, the rectangle means the other side, in other words, the bank side, did not know about it. It's missing this data. All right. Next, we're going to go to check number 1416 for 840. Is it on this side? Yes, it is. So we can check them both off. Then we got to check 1470 for 130. Check 1417 for 130. We've got check 1418 for 680. Check 1480 for 680. We've got check 1419 for 1690. Now this, better pay close attention. We've got 1690 here and 1960 over here. So someone recorded it wrong. So what we have to do is we have to do some troubleshooting and see who wrote it correctly. So in the real world, what you do is you go log in and look at the check image and see who recorded it correctly. So the way we find that out in this problem is we click on this box for additional information. And then down here in letter D, the correct amount for check number 1419, so that's what we're working on, check 1419, is 1960. Durkin's controller, that's the person who writes the check, mistakenly recorded the check for 1690. So this 1690 is incorrect. This 1960 is correct. So I'm going to put a rectangle around this because that means that the other side, in other words, the book side, has got it wrong. So we're going to need to correct the book side when we get down to here later. All right, so getting back here, we're going to skip the 1690. We already took care of it. So now we're looking for check 1420 for 1470. I don't see it. So notice check 1420, 1421, and 1422 are not on here. That's because we must have written them probably later in the month, but not necessarily. Really what it means is that we have recorded these checks. We wrote the checks and we recorded them in our cash account. But whoever we wrote them to has not cashed them yet. Therefore, they have not appeared on the bank statement. So I'm going to put a rectangle next to all three of these because none of these checks appear on the bank statement. So later on, we're going to have to correct the bank side for those. All right. So we are done with that. Now what we're going to do is we're going to go over here and we're going to do the same thing for all these that have not been checked off on this side. But we ignore the balances. We're only going to do the transactions. So this EFT, now this is a deposit, was not on this side, was not on the bank side. So we're going to put a rectangle next to it. Remember, the rectangle means the other side is missing the data. This $1,200 BC, remember, is bank collection. That is missing from the book side. So we'll have to enter that in our records. And this NSF check, $500, is not on the book side. So we have to put a rectangle around that. This EFT payment of $600 was not on the book side. So I have to put a rectangle around that. And then finally, this $20, remember the SC stands for service charge, the book side, or accounting records. Did not know about that. So we're going to put the rectangle around that. There we go. So now we can get back to the main problem here. And notice again, they're giving us the bank side. We can only work on this bank side. Once we get the bank side open, then they will let us work on the book side. So what do we put on the bank side? Anything that the bank was not aware of. But before we do that, we had to put in the balance. So let's see what the balance was on the bank statement. The balance was $17,860. So we're going to copy this over here. That's the end of the month balance. All right. Now again, let's bring back our two windows. On the bank side, we're going to enter any transactions that the bank did not know about. And this is just reviewing our 3 steps of the bank reconciliation. On the bank side right here, enter any transactions that the bank did not know about, such as outstanding checks and deposits in transit. Later, when we get to the book side, we're going to enter any transactions that the company did not know about, such as the bank service charge, interest revenue, electronic funds transfers, the bounce check, which means the non-sufficient funds check, any service charge, any errors we made. And then later in the problem, in the journal, we will enter any transactions that the book side was not aware of. In other words, the company. So we're going to put on the bank side any transactions that the bank was not aware of. So we don't need this window because this just lists all the things that the bank is aware of. So remember the things on remember this is the book side, the cash account, the checking account. We found 4 things that the bank was not aware of. So let's work with this one first, the 1880. So is this cash going up or cash going down? This is a cash receipt, according to this up here. So we have to put that in the addition. 1880. So why would this 1880 appear on our accounting records, but not on the bank? Because look when it happened in the month. It happened at the end of the month. So this is called a deposit in transit. We recorded it, but the bank did not, or had not had it recorded when they printed the bank statement. So now what we're going to do is we're going to add 17,860 plus the 1880 gives us a subtotal of 19,740. Now we're going to bring this back and we're going to do these 3 transactions that the bank was not aware of. So these are payments, and these are check numbers right here. So these are all checks. So what do we call a check that we have on our records that the bank does not? Those are called outstanding checks. So we've got checks number 14, 20, 21, and 22. So these are outstanding checks. Check 14, 20, 21, 22. And the amounts are 1470, 1300, and 620. 1470, arrow down, 1300, arrow down, 620. Now we're going to add up these checks. That gives us 3,390. And notice these are checks. So we're going to subtract. That's why they have the less over here. So 19,740. $19,740 minus 3,390 gives us 16,350. So that is our adjusted balance for the bank. So what this 16,350 means is that our cash account is actually has $16,350 available. Not necessarily available, but that's how much cash we actually have. Check our answer. Okay, now we're on the book side. So on the book side, we have to enter anything that was on the bank statement. So here's a bank statement that we did not know about. So remember, we put rectangles around things that we did not know about. So we've got lots of things that we did not know about. So let's start with this $200 EFT. Now this is a deposit. So I need to go back to this box, which I got to by clicking on this right here. Open this box and it says the ETF credit. So this line contains our EFT, electronic funds transfer information. So we've got a credit, which is a receipt of rent, and we got a debit, which is an insurance payment. And the reason they're calling it debits and credits, you just kind of ignore that, but it's from this section. So deposits are credits for the bank on the bank side, and checks are debits on the bank side. Don't worry about understanding the credit and debit part. Just know that this is the deposit section, and this is the check section. So again, we're working with a deposit of $200, so EFT. So it's a deposit, means we received it. So they must be talking about this. The EFT credit was a receipt of rent. So we're going to, and because it was a receipt, it means we have to put it in the addition area. Receipt of rent. EFT collection of rent. For $200. Now I forgot, we need to put in our beginning balance, our ending balance at the end of the month. So notice here's our cash information, but notice it does not give us the balance. So to find the balance, it's right here. Durkin's cash account shows a balance of $16,340. $16,340. All right. So let me go back to that other bank statement window. So we've taken care of this $200 deposit. Now we've got a $1,200 deposit. So we have to figure out, well, why did we have a $1,200 deposit? BC stands for bank collection. So let's go down here. It says the $1,200 bank collection was for a note receivable. So because it's a collection, I'm going to put it under the addition area. $1,200 EFT collection of note, or no, bank collection of note receivable. BC stands for bank collection. So we've taken care of this one, and we've taken care of this one. Now let's go down here to the NSF check. NSF 500. $500. So here's the information on the NSF check. It says the NSF check was received from a customer. So NSF, remember, means non-sufficient. Non-sufficient means not enough. Funds means cash. So this person who wrote us a check previously that we added to our cash account, they didn't have, it turns out later that they didn't have enough money. So the bank on the next month, which is this month, the bank is going to come and take that money away from us. How do we know they're taking away from us? Because it's in the checks section. Checks means deductions. So they are going to take that money away because it was a bounced check. So that was for $500. NSF check. So what we're going to have to do then later is contact that customer and tell them that they owe us $500. Okay, we've taken care of the NSF check. Let's figure out what this EFT payment was for $600. The EFT debit was an insurance payment. Notice it says payment, so that's how we know they're talking about this one. So we paid insurance $600. EFT payment of insurance. So we've taken care of the $600. Let's go down to the 1960. So to refresh your memory about this check, so we wrote it as 1690. Oh, I should say we recorded it as 1690. The bank statement shows as 1960. We did some research, and according to this line here, D, the correct account for check 1419 is 1960. So the bank was correct. So what we did is we wrote it in our journal as 1690. So we've already recorded 1690. We have to record, we've already subtracted 1690 because it's a check. But we did not subtract enough. We need to subtract a total of 1960. So we need to figure out what that difference is and then subtract that. So we've got 1960 minus 1690. So we have to subtract $270 more so that the total subtraction is equivalent to this 1960. So the explanation of this is correction of book error. Since we made the error, we call it a book error. If the bank made the error, then we would call it a bank error. And then lastly, we have a $20 service charge. And of course, it's in the check section, so that means it's being subtracted. Service charge. So now what we're going to do, we're going to take this, well, first of all, we take the 1200, add it to the, 200, add it to the 1200 gives us 1400. And then we're going to take this 1400 subtotal, add it to 16,340, gives us 17,740. So now we're going to take these subtractions. We're going to add up the subtraction. So 500 plus 600 is 1100 plus, what's that, 290. So that gives us a total of 1,390. And then we're going to take the 17,740 and subtract 1,390. 17,740 minus 1,390 gives us 16,350. Now you have to double check. Is this total here the same as this total? Yes, it is. That means we've done the bank reconciliation correctly. So this is our adjusted book balance. So we're done with the bank reconciliation. Now remember, just because we've done the bank reconciliation is not our official records. So we have to go into our official records, which is the journal, which is what this is. And we have to record everything that we were not aware of. In other words, this book side. We have to enter these transactions because we were not aware of them until we received the bank statement. So it says begin with the EFT collection. So up here, EFT collection was for rent, according to this line. So we got $200. And since it's a collection, that means cash is going up. And of course, cash goes up with a debit. And what is it that we received? It was for rent. So now some of you are going to want to say rent expense. But if we're receiving cash, that's rent revenue. To record rent collection by EFT. Next, journalize the collection of the note. Bank collection of note receivable. So we got $1,200. And because it's in the addition section and because it says collection, that means cash is going up and cash goes up with a debit. And why did we receive this? It's a collection of a note receivable. So the note receivable is going down. So how do receivables go down? They're an asset. And assets go down with a credit. Note receivable collected by bank. Next, journalize the NSF check. So we're going to scroll back up here. The NSF check was for $500. And notice this NSF check is in the subtraction section. If you want to record these journal entries, you can always just record them from over here too. So notice this $500 was from the check section, which means cash is going down. So cash has to go down. So I'm going to credit cash. So now we have to figure out, well, what's the debit account for? So remember, this NSF check is a bounce check. It's a non-sufficient fund. So here's what happened. Is a previous month, our customer wrote us a check for $500. So we increased our cash account by $500 in the journal, and then we deposited the check. And now this month, turns out the bank says, no, they did not have enough money, so they're going to take that money away from us. So now does that person owe us that $500? Yes, they do. So what account shows that they owe us money? Accounts receivable, which is an asset, and it goes up with a debit. That's why we're debiting it. NSF check returned by the bank. Journalize the EFT payments. So we can go up here. EFT payment was for insurance. So because it's payment, that means it's going to go down. So cash is going down. Cash goes down with a credit. And what did we spend that money on? It said insurance, so that must be insurance expense. To record payment of insurance bill by electronic funds transfer. So this EFT, what's happening is what we've decided to do is we decided to have instead of sending out a check every time the insurance is due, we're going to just have them automatically deduct that from our checking account. That way we're never late, since it's done automatically. Now journalize a service charge. I think it was $20. Yeah, service charge right here, $20. Because the bank is charging us that, cash is going down. So the other account is going to be some type of an expense. They chose to use bank expense. To record bank service charges incurred. And then journalize the entry to correct the error. So again, the error, to refresh your memory, The correct amount of check 1419, this one that we wrote for $16.90, the correct amount is $19.60. Durkin's controller drunkenly recorded the check for $16.90. So this is incorrect. The bank recorded it as $19.60, which is correct. So we have to record that on our side. So what happened is we subtracted $16.90, but we need to subtract more than that. So that's how we came up with this $270 difference. So we have to subtract $270 more. So that means cash is going down. Cash is going down. And then what was that check for? It was for rent expense. To record error on check 1419. And that's it.